Hello everyone, how's it going? In this video, we will cover Bed Bath & Beyond, trading under the ticker symbol BBBY. The market has been volatile recently, with many equities being up and down big time. So many people are interested in the stock BBBY because of the short squeeze potential. In this video, we will take a look at the stock from a technical and fundamental perspectives and determine what would be the best approach. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description below, as every help is greatly appreciated. So in today's trading session, BBBY has done fairly well. It has mainly maintained its level above the $3, and for me this is significant because previously the attempt since the beginning of the year has been to reach $3. And now that we are reaching, now that we can hold the $3 level, so essentially becoming from a resistance to a support, it kind of changes the dynamics for things to come. We have to remember that overall, BBBY, even though it has been existing for quite a few decades, the stock dynamic, I would say, is mostly similar to a small cap, speculative-based stock. The reason why this is the case is because the company's operations have been greatly impacted over the past few months and even years. And going forward, we probably have to put in more speculation consideration than if we were to evaluate a company like, say, Coca-Cola or Walmart. Now, from a long-term perspective, it's quite clear that things are looking very low and they can be good for a purchase. This can be the case, but this would also assume that things can go much better from now on. I believe that things can get better, that eventually they might be able to test, the $10 level, but this would mostly be speculation based. In other words, it's not because they can sell more soaps or kitchenwares or dishes and that kind of stuff that we're going to push the stock back to where it was back in 2020 and even 2021 and 2022. So for that reason, I would say that one, we have to look at the short squeeze potentials, and the other one is we have to look at the volume. Right now, things are still holding, which is definitely a good news. And I would say that based on this, the short-term outlook is pretty favorable, at least in my books. So Bed Bath & Beyond, BBBY, is a home goods retailer. It was founded in 1971 and headquartered in New Jersey. It has shops in the United States, Canada, and Mexico. So the company has a wide range of products for home, including bed, bath towels, kitchen electrics, cookware, window treatments, and so on. They have a lot of home decor, giftware, and housewares as well. It operates both physical stores and e-commerce platforms, giving customers a wide range of options to shop in their stores. One of the key strengths of BBBY is its strong brand recognition. So the company has a decent reputation for offering a wide selection of high-quality products. And this, over the years, has definitely attracted a loyal customer base. The brand recognition also helps the company to successfully expand into new markets. So far we've talked about Canada and Mexico. One day maybe we can talk about Europe or Latin America as well. Another strength of the company is its diversified business model. So in addition to the core retail businesses, it also operates the brands and businesses like Christmas Tree Shops, Harmon, BBBY BBBY, and One Kings Lane. So these diversifications can also help, at least on paper, help the company to mitigate the risks and to generate stable revenue streams. Now, BBBY has been successful in developing strong relationships with suppliers as well, with timely payments and maintaining those relationships over years of collaboration. In recent years, though, the company has been facing some rough challenges, especially in the face of increasing competition from e-commerce giants like Amazon. Not that they don't also partially benefit from it, but what I'm trying to say is their competitors are legion, and the consumers for those kinds of goods are limited, especially in times of recessions. Additionally, the company has struggled with declining foot traffic at its physical stores, leading to falling sales and earnings. So, to address those challenges, they have tried to focus on the e-commerce side of the business. They've been working to improve the websites and mobile apps, making them more user-friendly and personalized. They're also focusing on store closures and cost-cutting measures. The company has closed down many underperforming stores over time and also laid off a certain number of its workforce, closing down distribution centers and consolidating the supply chains. So those measures are designed to help controlling the cost, therefore increasing the net income. With that being said, it still remains under significant sell-off pressure due to company-specific and macroeconomic factors. So the main reason why people might be interested in the stock to begin with might be the stock market price action rather than the fundamentals. And I would like to comment on this. Basically, this is another one of those, the company might not be doing so well, and there are structural reasons for it, right? Especially in this case, it kind of reminds me of GameStop. So GameStop is a company that sells games in the retail world physically. Now, this screams red flags. So it's the same case here. If we're talking about soaps and bath products, these are the kind of stuff that people don't need to, to go outside of their door in order to buy them. So having a lot of stores is kind of a weakness at this point, especially when people are kind of used to get things delivered at their doorsteps. I'm not saying that BBBY are not making efforts in that sense, but there are heavy trends that are not in their favor. So really, it's one thing for them to make the effort. It's another thing whether they're going to succeed. And it's even another thing, so like a third thing, about whether people can find BBBY attractive. It could be because the company has a very high short squeeze potential. It could be because people think that, well, volatility will create additional volatility. So therefore, in other words, if the stock has fallen by like 95% in a day, you know that there will be mechanical recoveries the next day or over the next few weeks. So in this case, I believe that this is what a lot of people are hoping for. They're hoping for this kind of non-fundamental price movement in their favor, meaning up. So with that being said, let's also talk about its ownership. More than 40% of BBBY's equity is owned by institutional shareholders, the rest being owned by retail traders. What this means is that while the stock has a relatively high volatility and is also a potential stock to invest in for the long term, theoretically speaking, in this case though, because of the going concern issue, I wouldn't really put the emphasis on investing just yet. So one key behavioral difference between institutional and retail shareholders is their investment horizon. The former has a far longer view on things, with a focus on a company's fundamentals and the growth prospects. They're also less likely to engage in short-term trading and less affected by those volatilities. Retail, on the other hand, tend to focus more on short-term gains and more likely to make decisions on a whim. In this case, because 60% of the shareholders are retail, what this also tells me is that it's going to be a volatile stock, and people are going to buy the stock or sell the stock on a whim. We want this for our trading scenarios, but I wouldn't say that this is necessarily great for people who want to put the money in the long term. In fact, don't put your money in BBBY for the long term because there might not be a long term. I'm not sure if this company has a guaranteed going concern. So in this context, I would not recommend to invest in the stock, but to mainly consider the stock for its trading opportunities. One of the key catalysts that might explain the retail interest in BBBY is also, like I've mentioned before, the short squeeze potential. Due to significant short positions against it, there are currently around 73 million shares being shorted off exchange, representing 55% of the short volume. This can support the theory that there is a concerted shorting operation from institutional short sellers against BBBY, because of the fundamentals mostly supporting this outlook. I consider that the short position size can be significant and that this can indeed play a major role in sending BBBY's price action to a much higher level. The takeoff would be unrelated to the company's fundamentals but simply due to a supply and demand game. It also tends to be a self-fulfilling prophecy once buyers pile in. Now, it's also important to note that the short interest is not a guarantee of a short squeeze, but it's a metric worth monitoring for investors. It's also worth wondering that the short sellers may have valid reasons for their bearish sentiment, and a short squeeze may not happen. So based on my analysis, my opinion about BBBY overall is that it used to be a brick-and-mortar, pretty solid and established presence in the financial markets. But nowadays, given that the market cap has dipped so much and given that its operations are not at the optimum level, I would say that BBBY is a speculative-based stock, so people can own it for the purpose of short-term swing trades and to profit from the expected volatility uptick. With that being said, if you want to stick for the long term, now might be a good time, but you have to go in assuming that the company's going concern will never be under threat. In other words, you have to go in assuming that BBBY will continue its operations for the foreseeable future. I personally don't want to put my eggs in this kind of long-term basket, and this is why I would prefer to say that BBBY is a stock that you can hold for a couple of weeks or months, but it's better to remember to cash out when the profit target is reached. My personal profit target for this kind of situation would be around 30 to 50% over a period of 6 months. In other words, if it doesn't reach that kind of level, it's better not to bother too much with holding it for longer than we should. Unless, of course, the situation changes for the stock, like fundamentally. If the sales begin to pick up, if the profits begin to pick up, if the company starts to yield dividends once again, so on and so forth. Right now, I'm not seeing much of this. So this is why I'm not going to assume that this has to happen in the short-term future. Now, if you want to buy it for the speculation purpose, it's now would be a good entry point. And the maximum exposure would be within 1% of your portfolio's capital.